everyone. Good morning, good afternoon, happy Thursday. I can't believe we're here already. Our 21st Be Relentless webinar. We've been at this more than a month now, joining you every day, and we're glad that you've been able to join us, and thank you for spending your mid-morning or early afternoon with us. We hope that we've provided lots of value and lots of things for you to think about over the last month as you've been hanging out at home. Because this is the last day of our first round of webinars, more on that a little bit later, we thought that we'd take a look back at what's happened over the last month and also take a look forward at some of the economic stuff that may be coming in the weeks to come. And our Gary Zalepa always does this at our annual conference, taking a look at the economic outlook. And we asked him to do that again today. Obviously, he doesn't have a crystal ball and no one knows exactly what's going to happen, but we're just going to press pause, take a look at what's happened, what he thinks could happen, or maybe some of the indicators that he'll be looking at as things move forward. So Gary, hi, thanks for joining us.
Hi, Lee. Wow, it's flattering to be number 21. That's a pretty important number for us. So
it is an important
that's pretty cool.
number for Century 21. So well, we will let you take it away. You've been doing tons of research, you've been saying.
I love this stuff, so I appreciate the chance to chat a bit about it. I'll take it from here, Lee. I would have never thought at this point in time, as I was preparing this similar presentation in January and February, that I would be looking at April and changing my content to be what it is today. So definitely interesting, challenging times, and I'm hoping I can bring a little bit of just a bit of insight to everybody and help us see what's kind of been happening. So as I was saying, I kind of had a presentation that I was comfortable with and knew where we were kind of going and projecting where things were happening in the real estate market and the kind of the Canadian economy in general. And then obviously COVID-19 hit. And so right now I'm going to take you through a bit of a story that's kind of developed, and it's kind of so far it has a couple parts to it. And the first part is really kind of what happened to us in March. And as you can see, there's some figures here. These are all coming from the Canadian Real Estate Association. So it's a national look at things. Obviously, there's regional variations, but basically, as we came out of the gate in March and closed the books in March, we had basically a month to month from the March 19 to March 20. We saw sales fall across the country in a matter of units of 14%. So the interesting thing is, as you know, realtors, practitioners know, up until March, we're going gangbusters in most parts of the country. In fact, because of that, when March closed off, the year-over-year sales, as they would have compared to last year, were still up almost 8%. So most realtors would be able to express that looked like they were on track to pretty much have a record-breaking year. In almost most markets, even some of our weaker spots across the country, which we're going to get into a little bit more regional stats, you'll see that was a trend that was starting to look more positive. Now, the one thing is interesting to note, which will kind of get to our point at the end, is the new listings have fallen about 12.5%. So that's the amount of new listings coming to market in March were down month over month. So that's an interesting thing too, because if you look at the new listing trend, even going back into 2019, we were actually on a bit nationally, anyways, we were nationally on a downward trend already. There was a number of new listings coming to the market was lowering, and that was causing tightness. And you saw that through price escalation in many markets, especially in Ontario, in Quebec, parts of the Maritimes, and even in Vancouver and the kind of the greater Vancouver area. You were seeing that happening on prices because the inventory was really tightening up. We were getting to historic low levels. I think I had mentioned in the past, we were at a 10-year low for new inventory coming to market. So it's kind of a snapshot on where we kind of were then in March. And so, as you can see here, we got, in March, the first week of March, really, we had a Bank of Canada rate at 1.75%. And today where we are, as you know, there's been a very aggressive move by the Bank of Canada, and to basically down that bank rate down to 0.25%, which really has the effect of bringing that prime rate down for lending to 2.45, which is didn't see that coming. So that's definitely in an effort to ease lending conditions for the banks in an effort to assist businesses with their cash flow positions at this time. And that's going to relate to some things that we get into looking at as we come and look at the recovery and how that's going to look. The inventory that we just mentioned is going to kind of play into that, and obviously these record low interest rates by the bank. Now, the interesting thing is we get the the governor there, Stephen Poloz. He's due to step down. There hasn't been a lot of chatter about that, but he has indicated that he's on track to continue to do that. So, even the Prime Minister recently said that they're going to go through the regular process and they'll have an announcement on the appropriate time. So, so that's all kind of happening behind the scenes with us. And so, in January, we had Deloitte fashion this GDP forecast, and we got the GDP numbers on the left side of the line showing where we have been the last little while in the forecast. And you can kind of see that we were basically set around 1.7% is the number that we were talking about then. And then April 15th has hit, and we've got some new numbers to look at. And so most major firms are looking at negative growth in the country for 2020. So, that's not what we were expecting. So that's the big story. The Stats Canada numbers did come out for March, and they're preliminary, so they're not. They usually come out later, but they're moving things quicker. And they talk about a 9% decline in March. We're expecting that in April, the number is going to be closer to 30%. So significant changes in GDP across the country, and that's obviously going to drive all of this, right? So interesting though, Deloitte is looking at 21 and 22 for basically a return to what they had forecasted before. Now, they did really put a big caveat on their site to indicate that this is really preliminary and they're still not confident in the 2021 figure. So just want to let everybody know that. So the key influencers are kind of self-evident to a degree, but obviously the impacts of the coronavirus and the health measures put in place by governments across the country has been the big driver here. And things to be looking at for where we're headed is going to be how the policymakers decide on the reopening of our economies. And lots of chatter recently about this. We've in Canada, I think we have the benefit of being able to see some best practices coming out of other jurisdictions in the world to see what perhaps what worked and what didn't work in those places. And I know BC is going to be probably moving first in this regards, and Saskatchewan's talking about this as well. So, as we see what's happening across the country, I think other jurisdictions will be able to make appropriate adjustments and hopefully get this right, because this will really be the key for many real estate businesses as to how we can kind of get going and what that might look like and how we can forecast what that is for our business. And then on the bigger scale, the macro issues are always still there. I think they've adjusted somewhat slightly. The international kind of relations and geopolitics, I think we're in for some changes. That's something we can talk about that maybe over maybe a cocktail or something sometime, but that's I'll leave that aside. But the price of oil, who would have expected that if you wanted to store your oil, you're going to pay to do it? That's the world we're in. That's having significant impacts in our oil producing provinces, your Alberta, Saskatchewan, and especially Newfoundland. So that's not going to help from the real estate side of things. And trade, I think international trade is there going to be some changes there. So that's all going to have some impacts on how our economy kind of comes out of things. So let's look a little bit directly at real estate. These are Canadian Real Estate Association prices, and I wanted to show this as this is kind of that back to that March. Just looking at March, how did, the basically year over year prices, how did they kind of get affected across the country? And as you can see, I mentioned, the prairie provinces were still a little off, or they were coming back. Newfoundland was scheduled to kind of be coming back on price gains within the year. And across the country, some of it was a little rapid as far as price increases going. PEI, you can see almost 20%, and Ontario over 15, with the GTA just leading that charge with a tremendous pressure on prices upward. So that even was the case at the end of March, despite the changes but this is going to get reset as we go into April. Unfortunately, don't have a lot of, well, there's no data yet from CREA on what price impacts are, but I do have some things that I'm going to show you which are indicating price that I was able to pull out of some MLS. So we'll look at national home sales. So here we have the recorded sales volume across the country. CREA is basically stating a 14% drop in activity across the country for March compared to February. And the interesting thing is that activity, which you'll see if you compare it to last March, is actually still above last year's numbers. So we were doing much better, but it's a significant change from the pace we were on coming out of February and even January. So, that's discerning. I guess that's unsettling, but that does show that there is still that demand. It could possibly be there as we come out. So let's take a look at this new home listings. So this is where I was speaking about the inventory. CREA is really reporting a decline of about 12.5% across the country in March. Most of that activity came in the last 2 weeks of March. So that's going to have some impact on how prices are affected coming out of this crisis, because as you can see, the February market had seen a decent increase in some inventory across the country. There would be regional variations, of course, but that was a good sign, because as I mentioned before, we were running at a 10-year low of inventory. And so the fact that we were seeing new inventory come to the market was an encouraging sign. Now with the activities dropping off, sales activity dropping off, and the number of new listings dropping off as well, that can have basically a calming effect on prices. And I was just reading something that just came out from Craig Alexander, who I follow. Craig's a senior economist there at Deloitte, and he used to really, his talk about real estate today was, he's pretty confident that this whole impact of COVID on real estate prices might be tempered by the fact that the inventory, or the available inventory, is actually quite low, which should help if you look at supply and demand curves and how that relates, that should keep price pretty stable. And perhaps a couple places in the country there might be some drops, but not a significant change in real estate values. So that's, I think, a good message for your clients, for people in general. So again, that's the new listings graph. It was on a bit of a downward trend. That's, as you can see, for the first quarter of 2020, that's quite low, and I suspect we're going to see that continue, that downward trend for the immediate future. So let's look a little bit at some sales activity. Again, I like to show this one because I know we talked about the sales activity already in the first quarter, but it has to be pointed out that if you look at the 2019 first quarter and you look at our first quarter, we were definitely on pace for a record-setting year, which was forecast originally by CREA. CREA actually forecasted 2020 to be one of the years where it actually peaked in sales, probably across the board. It might, in fact, hit the top. But that's not happening. But the good thing is there was a lot of business written in the first quarter. That obviously is changing now, and we're going to get into that a little bit. So let's look a little bit about the actual activity. So when we look at some of the statistics, you actually have to look at what's called seasonally adjusted and not seasonally adjusted. So we'll take a look at that just to get I think a little bit better understanding of the slowdown. We're still, according to CREA, our sales activity was still almost 8% above the activity from last March, or March 19, right? So, and again, and you know, that's still a big drop though from the gains we were experiencing in February. So definitely, you know, COVID, when the lockdown hit on March 13th, that's when things started to happen. And unfortunately, you know, CREA hasn't published any data to show what April's happened so far. Obviously, that'll be coming with the month wrapping up. But I want to take a look into a little bit, dive into some regional variations, and this is what I was able to come up with. So again, this is regional sales in March for these areas. So in the GTA, still, you know, it was going really strong still. So when they closed the books in March, still over 20% increase in sales activity from the period before. Montreal off a bit. Greater Vancouver just down slightly there, almost 3%. Fraser Valley, Calgary, you can see this all relates to what we were talking about, the prairies. Edmonton down about 13, and Winnipeg itself 7. Hamilton, Burlington, significant decrease here in almost 25%, and that's in continued even around into the Niagara region as well. That's something we're seeing as well. And Ottawa around 8%, and that's when you compare the month over month from February to March. So, and just to kind of get into this a little bit more to get what's happening, I was able to pull some data from TREB, and I know that that's not going to be across the country, but I think it speaks to what's happening in the sales activity. And this is where we're going to be able to look at March and then moving into April to see what's happening. And so, you know, the Toronto Real Estate Board has basically published that in March their activity was still up, and that relates to what I just showed you across the country. But again, looking at the seasonally adjusted numbers, which kind of take that seasonality out of things, it definitely does show the decline registering there, which is important because I think you look at the year over year, it's a bit of a false positive, you know, because it's not really the trend. So the trend is better represented through the seasonally adjusted number, and that's showing the drop of over 20% in the activity. So that's the trend that we're on. And so in the paper yesterday, Mike Collins, people know Michael, he's the one that had to tell everybody first half of April. So now this, unfortunately, I don't have the stats. They're not publishing really, but they came up with a press release, down 70%. So now we've seen March. We're talking their last graph. We're looking at 20% in March. February, April. The April numbers for the first half of April are 70% sales activity decrease. So that's the trend that we're on. That's the reality in their numbers there, and these numbers will translate nationally as well within a few percentage point because of the volume of activity on the Toronto Real Estate Board. So I did get some information from CREA that supports what I just said. They've got some preliminary data that they're tracking that is showing about a 50% decline in sales nationally for April. And so that's a little bit less than what the Toronto is reporting, but that makes sense because of the different regions across the country and how they're impacted. But one thing that jumped out there was that the condominium segment, or strata, if you're in BC, this segment of properties has seen the largest decline in activity across the country, and that is over 70%. So you can get into a lot of reasons why that's the case. A lot of the sales activity was being driven by condominiums was based on affordability. So you could make a pretty good case that segment is the most impacted by financial change. So that makes sense that segment would probably receive that. Now, everybody wants to know prices, and so I have some statistics on prices. CREA didn't have any numbers on. They didn't have any numbers they were showing me on that. But Toronto Real Estate Board came out publicly and said that for April they're tracking a 1.5% decrease in prices. Now, I do have to kind of put a caveat on that. The data that they're looking at includes prices across all spectrums, right? So that can be a little misleading because basically they're identifying the fact that a lot of activity in their high end has just dried up. So it's just not happening. That does tend to bring average prices down. Doesn't mean prices are declining per se. It just means that the activity is not happening, and that's caused the average to come down. So unfortunately, we have to wait to get a bit better picture on that. But that's what we're seeing. So, I think really what, if you look at the inventory, the number of new listings coming to market and the inventory being low already historically to begin with, and the fact that the sales activity volume is really declined, that usually tends to mean that the transactions, they're not happening, and because of that, prices are kind of holding. That's consistent with what Deloitte has come out just today and said about their outlook on real estate short term. They basically said that they do expect some modest declines in sale prices going into the year and maybe into 2021, but it'll be very regional. And it'll depend on the elasticity in their markets, depending on how much inventory is there, how many days on market you have, and how many buyers are able to come back to the market once we kind of start to reopen the marketplace. So that's all part of that. And so kind of getting into a bit of a summary, I see it as a bit of a, I mentioned as a tale of a couple markets. We had, I think, activity that was post COVID. We had that robust, really active real estate market that, quite concerning, might have been ready to really overheat. I know a lot of people probably would love to see a reheated up real estate market again, but I think that might have been some problems in that. Because sales were recovering across most markets. The forecast was holding true, and the risks of on affordability have continued to increase. The affordability problem is not going away, so that there's pressure there, and markets were definitely tightening. We had seen CREA had reported that more than almost half, it was 46%, of markets across the country we're actually swinging to a seller's market, and that's the most. They recorded that as the most number of sellers markets that they had seen in their history, practically. I don't know if I can say that, maybe 10 years, but it's definitely, they haven't had that many sellers markets in a while, and the record low inventory was really driving that supply issue. We've talked before about that. That's a fact that we're not getting the multifamily units to the market. There's lots of red tape with the development approval process that's tying that up. That's driving affordability and prices, and all that's still true. None of that's going away because of COVID. It's just kind of on pause. And now, as we start to awaken and determine how we come out of this, those issues are going to still be there. The question really is, where will the consumer be able to meet the real estate market? And that's a big unknown. I haven't had anybody put that out there in their opinion. I've been looking for some idea or concept of where that demand is going to reset, but I don't know. And I think anybody that tries to tell you that is just, I don't think anybody really knows yet. So that's really to be determined, is to see where we're going to land on that, and that will really dictate the new activity going forward, and how quickly that activity comes back up to some kind of normalcy for us in the real estate market. And I think that's, so that really is just my summary of what is out there. I hope you found it interesting, and maybe I'll toss it back to Lee to see if we had any feedback or anything.
Just a lot of people agreeing with you. Most recently, Travis just said, he agrees supply and demand both dropped equally. If you do have any questions, please write in the bottom right-hand corner of the Facebook video. We'll be able to ask Gary any questions as he has it. Gary, do you think, my question is, are things continuing to change as quickly as they were a month ago? I feel like every 10 minutes, things would change 100 times a day. a couple of weeks ago. Have things slowed down?
Yeah, I think that's a great question, Lee. And I think people felt the pace of change was so fast, people were actually overwhelmed. I've got a sense, and I don't have any data on this, but I've got a sense that people feel that that pace of change of the announcements, all the things coming at them, the economy changes, all these things have settled down to a bit where they not to feel normal, but I think people feel that they're starting to get a handle on things. And I know talking to brokers across the country right now, all of them that when I spoke to them 4 weeks ago, there was just like deer in the headlights, right? But now the conversations I'm having with folks is more, oh, they got a plan, they have some idea the things they're working on, and they feel that they have a game plan to get them through this. And from an economic point of view, the economy, I think that people are starting to get a better handle on the impacts on their businesses and how they can manage that. And then the dialogue seems to be shifting to, how do I get ready for what's next? For the reset. I've heard people call that the kind of return of confidence. I think people are thinking in that vein now, and so I think that's a positive thing.
I agree. I'm just seeing if there are any other questions that are coming through that you might be able to answer. I'm not seeing any at this time, but I think the last thing you said is a great jumping off point to talk about what we're going to be doing next in our Be Relentless webinar series. As Gary said, everyone is sort of trying to think now, what's next? How do you get ready for what's next? And we're going to be talking a lot about that with our next round of Be Relentless webinars. So tomorrow, we're going to have a very special mastermind fireside chat talking about your mental and physical health during this time. And then next week, we're starting our next round of 21 webinars. This time, we're theming each week, and next week is Marketing Week. And on Monday, Eric Sachs from Breakthrough Broker is going to walk you through your 2020 marketing action plan. We're going to have a handout for you that you can download and work through some of the things that you need to be doing. And he's got some really good questions that you need to ask yourself, spreadsheets for you to work out budgets. I was looking through this yesterday. I think you're going to love it. We've also got some ideas. Sean Bell from Century 21 Drive is joining us to talk about Facebook ads. So next week is Marketing Week. The week after that is Technology Week, where we're going to look at some specific technologies and how you can be using them right now. The week after that is Business Development Week. And then we also have another Money Week. So much more ahead starting tomorrow, running them through until Friday, May 22nd. So we hope you will continue to join us each weekday at 10 a.m. Pacific, 1 p.m. Eastern. We're going to continue to be here and provide you value about things that you can be doing right now as we sort of wait to emerge from what we hope is the back end of what we're going through right now.
Yeah, let's hope.
So thank you to everyone for joining us. We really appreciate it. We will see you again tomorrow. Have a great rest of your day. Bye-bye.